Good morning. No, it's afternoon now. Well, good afternoon, everyone, and thank you for tuning in. Starting our summer webinar series. I am so excited for the facilitator that we have and the topic that we will be covering today. What to expect when you are buying a home, and so many, as I call them, cheat codes for those of us who may have gotten a little discouraged in the home buying process for a plethora of reasons that Ms. Dani Gerald will be unpacking for us today. Just a few general housekeeping things before we turn it over to Dani and get started. If this is your first time tuning in with us, of course, welcome and thank you so much for just coming and spending a little time with us today to learn and grow and gather. If you have not submitted an intake sheet so far this year, then please visit our website, increasinghope.org. Complete the intake sheet. That allows us the opportunity to continue these virtual webinar sessions at free of cost. That is all the housekeeping. Of course, if you have any other questions, if you're looking for resources, we are here Monday through Thursday from 10 to 4 p.m. Do not hesitate to call us. There's no such thing as a silly question. We are here for you. Now, to my left, you see this lovely face on the screen. This is Ms. Dani Gerald with First Citizens Bank, and she is a mortgage broker. And you guys, I hope you have your pen and paper or note taking device to really be able to soak in and come back and revisit the conversation that Ms. Dani will be facilitating with us on today. Did I leave anything out? No.
No, I think it's good.
All right. Well, I am going to stop talking and yield the floor to you. We will hold questions until the end of our session, just so we can have space allotted to answer those questions in case you think of anything else. All right. So, Ms. Dani, the floor is yours.
Thank you so much for having me. And like Ebony said, I am a mortgage loan officer here at First Citizens Bank in Somerville. And we're going to talk today about what to expect when you're buying a home. And so two of our most popular products that we have here at First Citizens Bank is our Community Opportunity and our Home Mortgage product. Both of them are 100% financing with no PMI or private mortgage insurance. And the difference between the two is one has an income cap and the other doesn't. And one has a slightly higher credit score minimum than the other as well. And so with these loans, you can actually buy a house with no money down, no down payment. You still will have closing costs, and both loan products allow you to either, of course, pay your own closing costs. We allow the seller to contribute, and you can get a gift from a relative. So you can use the combination of all three of those to help pay your closing costs. We do require a minimum credit score of 660 for our Community Opportunity loan and a 680 for our Home Mortgage Express product. With the Home Mortgage Express product, there is no income cap. You can buy wherever you like, and as long as you have that 680 credit score and don't own any other real estate, you can definitely do this product. You don't have to be a first-time home buyer, and if you do own real estate, you would just have to sell it prior to closing, which means you can sell your current home in the morning and buy your new house with this product in the afternoon. What is huge and what I like about these programs is the way we look at student loans. If your student loans are on an income-based or income-driven repayment plan, we will use that payment, even if the payment is zero. And that is huge for potential borrowers who may have six-figure student loan debt but still want to buy. So if you do have student loans, if you fit that criteria, I would suggest that you go ahead and put your student loans on the income-based driven or IBR, income-based driven or income-driven repayment plan. I'm sorry, for some reason I got a fog about them. It's either IBD or IDR. income-based or income-driven repayment plan. And so once you're approved and they tell you what your payment is, we will use that payment instead of using 1%, but now I think for FHA it's changed, but for conventional, we still use 1% of the balance for student loans as the monthly payment. And what else about this loan? We do require a 2-month reserve, and it takes about 30 days to close the loan. And so if you are looking to buy and you may not have money for a down payment, we can still help you become a homeowner. Now, but the home buying process, it can be stressful, it can be overwhelming. And so one of the things we want you to do when you do decide that you want to buy is you need to make sure you have all of your information. You know, you need to know how much money you make, how long have you been on your job, what is your job title, you know, do you get overtime, do you get bonuses, you know, how many hours per week do you work? Those are the type of questions that a loan officer would inquire about, and you have to be ready to and give us accurate information, because if you're off, it can have a negative impact on your loan, and we want to know as soon as possible, not at the 11th hour, that you really don't make $20 an hour, you really make $18.95. And so the difference between $18.95 and $2 could negatively impact the loan. So that's why we want to get as accurate information as possible when you complete the application. We want to know what you have in your 401k, your checking, or your savings account. We need a complete application before we can determine what your interest rate would be, what product you will qualify for, and then everything you put on that application, we need to back it up with documents. So, and sometimes there's several documents that we need to verify what's on there. So for your income, we'll need a pay stubs and W-2s just to back that up. So bank statements, we'll need 60 days of bank statements. We'll need 2 years of W-2s. So it's a lot of documentation that's required. So if you say, oh, I don't keep my W-2s, or I don't keep tax returns, then we really can't do anything until you provide us with that. Okay, so it's crucial that you keep up with all of your asset and income information if you know you're going to be buying a house soon. And there are going to be a lot of people helping you throughout the home buying process, and eventually all of us, we're going to ask you for your money at some point in time throughout the process. So we want to make sure that you're saving so that you're not overwhelmed when we're asking you for your money, okay? So the first person that's going to ask you for your money is going to be your realtor. And as a buyer, you don't pay the realtor commission. So always, always have a realtor working for you when you're ready to start the process. Once you're ready to buy a house and you're ready to make an offer, your realtor is going to ask you for an earnest money deposit check. And they don't take payment arrangements. They don't, they don't want half now and half later. Whatever is the earnest money amount, that's what you need to present when you're ready to make an offer. And sometimes it can be as little as $500 or as much as $1,000. And sometimes if you're going new construction, it can be more than that. So you need to be prepared that, once you start this process, it goes quick, and everyone is going to want your money. Okay, so you have to give your earnest money, and your earnest money will credit that towards your closing costs. Okay, and your closing costs are going to consist of bank fees, third-party fees, your attorney fees, because in South Carolina, whenever you buy, sell, or refinance real estate, you have to go through a real estate attorney, and you have to pay their fees. And the last thing that closing costs will consist of will be your escrow, okay? So once you get your earnest money and you're under contract, the next expense is going to typically be a home inspection. Now, we don't require, as a lender, we don't require a home inspection. We just recommend that you get one. And once you get that home inspection report, the inspector is going to be expecting his money. So there's an even exchange. You get the home inspection, the inspector gets the check. And that can range anywhere from $150 to maybe $300 to $500 for a home inspection. But it'll give you peace of mind as to the condition of the house and whether you want to move forward with it or not, or whether you may have to have your realtor renegotiate again based on what's found in that home inspection report. Okay, and then the next expense is going to be your appraisal fee. And the appraisal fee varies from bank to bank. Here at First Citizens, we collect a $525 appraisal fee, and that fee is typically, I would say normally, non-refundable, and that's because the appraiser is self-employed. They're not bank employees. So once you decide that you want to move forward, we collect that appraisal fee. The appraiser will not perform the service unless he's paid up front. So once he or she gets their payment from us, they perform the service, they give us the appraisal, and the appraisal will determine the market value of the home. And that is what underwriting will use to determine whether or not, the house is worth what you're trying to buy it for, okay? And that appraisal fee will be credited towards your closing costs because that is considered a third-party fee. And then the last fee is normally a CL 100. And that's an inspection that's required to make sure that the property doesn't have active termites. And that can range anywhere from $75 to $200. And we typically do that maybe a week or two prior to closing because that CL 100 inspection is only good, I believe, for about 30 to 45 days. So it still has to be active at the time of closing. Okay, so those would be your upfront fees that you would need to be prepared to pay, during the home buying process. And the more money you have saved, the less stressful it'll be so that you're not overwhelmed throughout the process. Okay, so the key is save your money, save as much as you can, keep your debts as low as possible. Don't co-sign for anyone. This process can be extremely stressful if you don't communicate with your loan officer and let them know what you're thinking. Because if you're thinking, oh, it's going to go according to where I think it should, then we won't close. So you have to communicate and listen and follow directions of the lender so that you'll know exactly what's going to be required of you so that you can eventually get to the closing table, get your keys, and become a homeowner. Throughout the process, there will be constant communication. And as a lender, I tend to communicate a lot with the borrower as far as make sure you're not overspending, make sure you're saving, make sure you're not getting any new debt so that if anything were to happen, because you just never know, I prefer you to have too much money than not enough. Just because if you're a penny short, underwriting won't sign up on your loan. So we want to make sure that as you start this process and as you're going through the process, you're pretty much informed as to what's going on, what's required of you, and as we get updates, we pass that on to the borrower so that you'll know, hey, your loan's in underwriting, we got the appraisal, or we may have, because sometimes we may have to deliver bad news, like, hey, you are short funds to close, and they say, oh, I've been saving my money, and clearly when we look at your bank statements and we see that you're not saving money, sometimes we have to have a little meeting about, hey, what's going on? We need you to save because if you're a penny short, we're not closing. So we need you to follow our directions, listen, and I tend to email a lot too so that if a customer's at work, they may be hearing me but may not be listening, or vice versa. So I tend to email a lot as well to let you know what's going on, what you need to be doing, making sure that you're saving your money so that we can get you to the end goal, which is to help you become a homeowner. And that is our process. And if anyone has any questions, please feel free to let me know.
Thank you. One of the things that came up while you were talking is the difference between I wrote it down here, so I'm looking at my notes, guys. So you listed two different credit scores. And so if we can just kind of reiterate that. So we have the 660 for the community opportunity and then the 680 for the Home Mortgage Express. Can you unpack that a little bit more?
Sure. The Community Opportunity Loan has a minimum credit score of 660, and it does have an income requirement for customers who are buying in the Tri-County area, which is Berkeley, Charleston, and Dorchester counties. The total income on the application cannot exceed 100% of the HUD median income. And so this year, the HUD median income for the Tri-County area is $81,000. So if your income is below that, you can do the community opportunity. But if your income is above that, then we would have to look at the home mortgage product, which requires a 680 credit score, and there's no income requirement. You can make as much as you want.
Okay. And so two other questions came up. One is, how long does someone need to be employed to be able to take advantage of these opportunities?
That's a good question. We typically collect a 2-year employment history on every borrower, but you don't have to be on that same job for 2 years. We just have to have a minimum of 2 years of employment. So if you were employed somewhere else and started a new job, that's fine. We just need to make sure that the application does reflect 2 years minimum of employment.
Okay, so 2 years of employment, and okay, altogether. And the next question that came up was, there is a lot of buzz about first-time home buyers. So it seems like there's been this increasing of followers of those who maybe don't necessarily want to buy a single family home first, but they are looking to buy like multi-unit homes. Does one of those loan opportunities cover that? Or what would you say to those individuals who are not looking to buy a traditional single family home first?
Okay, that's a good question. Now, on this particular on both of these products, they're only for single family residents. So you know, and that covers condos, townhomes, and single family residences. Once you go into multifamily, then that's a different type of credit criteria that we have to look at. So when you want multifamily, typically it does require a higher credit score, and you have to have what's called a reserve requirement. So they want to make sure if you're buying a multifamily unit, depending on the product, the reserve requirement could be anywhere from maybe 2 to 6 months of reserves. And what that means is, whatever is the estimated monthly payment, they want to make sure you have at least 2 to 6 months of that payment saved above and beyond what you have to bring to closing.
Okay, all right, so just to make sure I'm clear. So say for instance, that number is $1,500 a month, probably really lowballing it there. But if it's $1,500 a month, you have to have the total amount that is needed for closing, and in addition to that, at least a bare minimum of 2 months extra of that monthly payment in reserve.
That's correct.
As well. Okay.
And then for multifamily homes, they always require a down payment.
Okay.
The minimum down payment on a multifamily unit is 5%.
Okay. And are there any programs to help individuals who are just really want that multi-unit family, or is there no? Okay.
Not that I'm aware of. The only thing they offer assistance for is for single family residents.
Okay. Okay. Just trying to check on both places here. Peter, all right, Peter has a question for us. So we're going to go back and forth. Mr. Peter, can you unmute and ask your question? Let's see here. I'm trying to see if I can.
I think he's still on mute.
Yep. Pete here. All right, when he unmutes, he can just go ahead and ask his question.
I think I'm okay.
There we go. There we go.
Dani, great information shared. Thank you so much. one of the things that I run into in talking with clients of our agency is the real cost of owning a home. Do you want to comment on that? Because it's much more than just the mortgage.
Oh, yes, that's a good question. Yeah, with the real cost, and you can correct me, Peter, but I think the real cost also consists of the maintenance on the property, keeping the house insured, making sure the property taxes are paid. And I always recommend to people to buy a home warranty, because it's not a matter of if something breaks, it's always when. And having that home warranty sometimes is the difference between going into further debt or just having that warranty to say, hey, let's just pay that what's it called? It's a fee you pay to have someone come out. But that's the real cost. So you have to be prepared for anything that can happen when you become a homeowner. And for our products, those two products that we talked about, the community opportunity and the home product, we require that the taxes and insurance be included in your monthly payment. So that means our servicing department, we will pay your taxes and insurance each year, and you will get a copy of that bill. And how'd I do, Peter?
Great. No, there's a lot of hidden expenses, and a lot of it has to do with maintenance and being able to live in a place. It's one thing to afford the mortgage; it's another to be able to afford.
Yeah. And then you got landscaping. You have, especially
control, waste and sewer, water. I know that was one of the biggest shocks for me when I moved out of my apartment into my condo. All of a sudden, all of these extra fees are coming out the woodwork. Right now, if it's an apartment living, you don't have to pay for water and sewer. You're not paying for certain things, and now it's like, oh wait, I didn't budget that in. I think that's a perfect segue to another question that came up. For those that are looking to buy, is there probably not a magic number per the question, but is there a good number that they should start saving towards to have in that savings account to be able to, have a more enjoyable journey in the home buying process? Like, is there like a typical number, or say like if you can say $5,000, or is there like a number to have in mind to start working towards, in order to reach out?
Okay, it really depends on the price range you want to be, and that's because the Tri-County area, the real estate market right now is extremely hot. So a lot of sellers are in a position where if they don't want to pay your closing costs, they won't. So, and normally closing costs can be anywhere from 2 to 3% of your loan amount. And so if depending on the price range that you're in, if you're in that $300,000 price range, you probably want to have about $9,000 saved at a minimum. Okay, so it just depends on the price range that you're in. And so I always tell people I can't really give you a magic number, but I would say if you just continue to save, if you're thinking 5,000, I add 2 more thousand to it.
Okay.
If you're thinking 10,000, add another 2,000 to it, because you just never know.
Okay.
Especially now that we're still in such a strong seller's market, sometimes the difference between not asking for closing costs means you'll get the house. I have quite a few people that are still looking because they don't have their closing costs. So they're losing deals because sellers don't want to pay their closing costs.
Okay. And speaking of closing costs, are there still programs available for first-time home buyers that will assist with any of those down payment or closing cost expenses?
Absolutely. That's a good question. Yes. We do partner with Federal Home Loan Bank, and they offer down payment assistance and closing cost assistance. This is the first year, I believe, we ran out of funds in April. We typically run out about October, November. But this year, all that money was gone by April 29th. And this year, Federal Home Loan Bank was giving borrowers up to $7,500
Oh, wow.
down
Okay.
and or closing costs. And if they were considered a essential employee or essential worker, they got $10,000. And the requirement was you have to stay in the home for at least 5 years, so which is the average time people here in the Low Countries tend to stay in the home before they buy up in-house. So it would have been
Okay.
perfect. So we used every single penny that we had, and it was all gone by April. And so typically we get that money back every January. So for those of you who may have credit issues, work on those now, or if you know you don't have the 660 or the 680 credit score, work on your credit report now so that in January, I can give you down payment assistance for your closing costs.
Oh, okay. So that's some homework and some advice there. That's another one of those cheat codes. If you know they get more funds in January, I would probably suggest you start reaching out probably in November, December, just to get on their radar to see if there are any other things that you could be working on to make sure that you are ready for the January release of new funds. And so just so in the beginning of the year, and I think that was largely due to COVID, there were so many home owners who were just trying to sell. At the beginning, at one point, wasn't it a buyer's market? Now it seems like it's more of a seller's market. Like they are, almost like at an auction. Like, all right, what's your bid? What's your bid? What's your bid?
Yeah, who knew that it would have turned out the way it did? But when we were sent home for the pandemic, I just was like, oh my God, what's going to happen? And I literally worked every single solitary day from March up until today.
Likewise.
It's been like nonstop. I just, people were still buying. It was like, oh my God, I don't have to worry about whether I can take care of my family.
Right.
Now I just worry about, can I get some sleep? Can I get,
Exactly. How do you keep up with the amount of demand? Because I had two friends, one who, and this is exaggerated, he was like, I got a 17-bedroom house, for a little bit of nothing. I have another friend's like, I'm just trying to find a 3-bedroom home I can afford. But it was when the first friend bought his, it was literally almost a free for all. Like, I need to sell this property. Can you buy it? Do you qualify? Here, you can have it. And it seems like just a few weeks later, all of a sudden, it was like, it's not the same ball game anymore.
No. And then rates plummeted too. So when rates plummeted, everybody was trying to either refinance or buy a home that, you can buy at 3%, which, who wouldn't want to, buy a house at 3% or less? But that's what was happening. So rates started dropping, and everybody's like, oh, we can buy, or we can refinance and pay off debt, or refinance and do improvements to the house. It was just nonstop. So with the rates going down, I think it just made everybody feel like this is the time now to buy. If you're still employed, buy.
Okay. So it opened the door so that in this scenario, COVID was a huge blessing to a lot of home buyers who couldn't have afforded the market before COVID hit. And now it's like, well, here's the time. And I think that's why it's so important. And we harp on saving, and budgeting here at Increasing Hope. But I think that was also largely possible for those who had that savings already available, had that credit score already, they was just waiting on the opportunity. So seeing that, we don't know, we can't pinpoint when these opportunities are going to happen. It seems like we both agree here where we cannot stress enough the importance of money management and having that savings account. And, if your credit score is not where it needs to be, that's okay. Life happens, but come in and see us, talk to one of our credit specialists who can get you where you need to be, especially knowing that in January, there's going to be more money available and you have to be quick to the draw. So have everything else in place. So when that door opens, you can literally run through it. One other thing here that came up a couple of times, can you talk a little bit more about those folks who have high student loans? What are some opportunities or some things that, they can do in order to be able to take advantage of being able to purchase a home?
That's a good question. Not every bank has this program. So I've talked to people who have shopped. They've gone around, and by the time they get to me, they're really frustrated. And so this product that we have is a real game changer. And so if you have student loan debts, I always tell people if you do and they're significant, you've got to put them on that IDR payment plan. That's the only way I can help you, because even if you go to FHA, where now they've changed it to where they'll use up to 0.5% of the balance as the monthly payment, if you have $200,000 in student loan debt, instead of having a $2,000 payment a month, you now have a $1,000 payment we have to put in your debt to income ratio. That still may not help you. So
Okay.
our program is still amazing, a game changer. We've come in and saved the day a lot of times for people, so that if you're on that IBR program and your payment is zero, we will use zero as your monthly payment.
Whoa, say that again? That is huge.
Yes, if you're on the income-based payment plan, the income-driven payment plan, the pay-as-you-earn payment plan, the income contingent repayment plan, and your payment plan is zero, we'll use zero. I use that a lot. I have people, I have folders here I can show you now, people with $200,000 and $300,000 student loan debt,
Yes.
but their IDR payment is zero. So yeah, we can move forward, get them qualified. We'll use zero as the monthly payment.
Okay. So I think your phone should be blowing up here. Your phone and your email address, I'm going to share them before we leave, because I know personally, quite a few folks who that has been the only deterrence. Like, they have the credit score, they have the savings, but some people advise that you need to take them out of, what's the term of mine just went blank, forbearance, because maybe they're in school and now you have to bring them active, and so, like, all these things, it's like, even if I did that, that is definitely going to hurt my debt to income ratio.
Right.
So, it's like, what do I do here? It's like, I want to do better. I want to, be able to buy a home. I want to be able to start creating and having some assets here. But, these darn student loans is just prohibiting me from doing that. So you have a program that whatever that amount is that is deemed due to their repayment process, that is the number that you use.
Yes.
You're really not going to get any sleep now.
And then I will say this also, I've had to tell also a lot of people, if you're in school right now,
Okay.
you really have to decide what you want to do, what's most important to you. Continuing school or buying a home, because you may not be able to do both. Because if you're in school, they won't approve you for the income-based repayment plan, because your student loans are automatically in deferment or forbearance while you're in school. So that's the only way that we can't help you is if you're still in school. So I always tell those people, you have to decide what do you want to do. Do you want to finish the semester and then get on the IBR program, then after you buy your house, go back to school, or do you just want to continue with school, and then once you're done, then buy? But we can't do both, because once you're in school, they aren't going to approve you for it.
Okay. All right. So that's another cheat code, guys. So, if you're already looking at taking a break, or if you are taking a break, then, that is something else to definitely consider, or wait till the end of the semester, and take some time away. All right. Wow. Is there I thought we had one other pop up here. Is there anything else that maybe we have not asked, or that has not come up yet, that would be helpful for anyone who's looking to take that step over into the land of home ownership? Like, any, common misconceptions? I know one thing that keeps coming up with friends of mine that are buying the home process, there are lots of complaints of, oh my God, they're just in my business. Like, they know everything except for the toothbrush that I use to brush my teeth. I'm like, well, you're also asking them for like $500,000. So they probably need to date you quite intensively. Is there anything that maybe they could try to switch their perspective before the process begins to make this just a more enjoyable, time of transactions?
I would say, we are going to ask very intrusive questions. So I would say sort of be prepared for that, especially if you're a couple. Sometimes, if your finances aren't together, sometimes it can be shocking. I've had husbands freak out when they see the balance on a credit card that they didn't know, they had. So if you're going to start the process, be advised that we pull a credit report. And then as a loan officer, we go through every debt on that credit card, on that credit report line by line, because credit reports are not perfect.
Okay.
So if there is an error, we need to find out. So if your spouse doesn't know what's on that credit report, let's go ahead and talk about that now.
Okay.
And then go ahead and put your student loans on the IBR program, and then know how much money you make. I always think it's so funny when I call a customer or we're talking and they want to do a phone application, and I say, well, how much do you make? Hold on one second. I'm like, really? You don't know how much money, whether you're hourly or salary,
Mm-hmm.
Know what that rate is.
Okay.
And if you're hourly, then know how many hours per week do you work, because that's the next question. And if you don't know, I'm at a standstill until you tell me, how many hours are you at that place
Okay.
a week. So it's very intrusive, but that's what we have to do in order to get the application. So sometimes I tell people, if you want to apply online, then that's fine. That way you know exactly what we want. But if I'm doing an application and your husband or your wife's on the line and they don't know that you had a $20,000 balance on a credit card, yeah.
Oh yes, I've lived through a couple of those conversations. That's for sure. Not personally, but definitely within my family. So it sounds like you're saying, so have some you may experience some hard conversations. There may be some that they themselves should initiate, so there isn't as much shock when you or underwriters start asking these questions. They're able to answer it and be able to move forward and not potentially be the cause of the hangup. So it's not sometimes the money issue, it's what is happening here, where did all of this come from, and now the process stops.
Right. And especially if you're lucky enough to get a gift from a relative, I've had to tell, several people, I don't mind talking to your family member, but we're going to need their bank statement to verify that they didn't get a loan to help you with this gift, to help you buy the house. So if they're willing to give their bank statement, we can definitely use the gift. And I don't mind explaining that, but yeah, it's very, very detailed. But I want to make it as smooth as possible to tell you upfront, this is what we require and why.
Okay.
So you understand the mindset of an underwriter versus what you're thinking in your head.
Right. Okay. So it sounds like if you're accepting this gift or if you're being gifted, it almost sounds like it's pretty much the same process verification wise as if they were co-signing. So they do need to be prepared to answer some financial questions as well as release to you or the underwriter, their banking situation, their financial situation to prove that this gift is simply that, just a gift.
Right. Mm-hmm.
Okay. That's huge. That is something I did not know. That's really huge. All right. Well, is there any other final words? I'm checking here. It looks like Peter had another question before we get ready to wrap up here. Peter, did you want to unmute and ask your question?
Danny, it's Peter again. Okay. I wanted to run some terminology by you because I find some clients of ours are unfamiliar and rightly so with the terms, the housing ratio and the debt to income ratio. You mentioned them earlier, but can you explain what each are, number one, and why they're important?
Yes. For some products, some mortgage products, they have a housing ratio and overall debt ratio. And so some lenders may have a program where the ratios may be, to use for an example, 38/43. And what that means is that 38% of your gross income can be allocated towards your housing payment. And then 43% means that 43% of your gross income can go towards all of your debt, meaning what's on your credit report and the proposed house payment. And that's why it's crucial that we get an accurate income amount from you, especially if you're an hourly employee. It has to be down to the penny what your hourly rate is. No exaggeration, no rounding up. Whatever it is, that's what we need to use to qualify you, because those ratios, there are no exceptions for the ratios. You can't go over those ratio requirements. And so the housing ratio is always at the gross percentage of your gross income. That's the maximum that your house payment can be. And that includes taxes, insurance, if you're getting mortgage insurance, flood, and if you're buying a townhome or a condo, the HOA or regime fee as well.
Thank you.
That HOA fee was another thing that I was not used to, and some of them can be very costly. And I think we may need to come back and talk about a little bit about preparing yourself mentally for the difference between apartment living and, owning a home, because there are some more restrictions. And sometimes it's like, yes, I am free from all of these guidelines. If you move into an HOA environment, they are probably even more. There's a rule for everything, and there's always someone watching. You can get away with apartment living, but in HOA, it's just like, hey, your light was left on past the time. Hey, you did not move your garbage can and fence. Here's this fine. It's like, whoa, what is happening? And so I think, sometimes we get so excited for the home until we're not fully prepared for the change of perspective and the change of lifestyle that may come with that, because, your neighbors may not mind your blasting music, but in your apartment, maybe it was a community apartment with similar age ranges, but now your other neighbor may not appreciate the same sentiments or the dog barking or what have you. So I just really appreciate this conversation. Let's just check in both areas to see if there's any additional questions. Looks like we have answered them all. And so just thank you so much again for being our facilitator. I am going to share my screen to be able to show our attendees on how to reach you, in case once we finish here, if they have any additional questions, then we certainly want them to be able to get in contact with you. Also, here I'm going to stop video. Also, we at Increasing Hope, we are here to help. So if you are looking for, if you're trying to prepare yourself to be able to take advantage of the resources and the new fund allotment that Dani, has graciously shared with us, then reach out to us. If you go, what, my credit is where it needs to be, I have the funds available, and you are looking to contact Dani for further assistance, then her email address is listed on the screen. Dani.Gerald@firstcitizens.com. She's very responsive, so it will not be lost. You will hear from her. If you are looking to prepare yourself to be in the proper space and ready, and you need some assistance, don't hesitate to reach out to us here at info@increasinghope.org or give us a call. We are here again Monday through Thursday from 10 to 4 to meet with you, to be able to get you all the tools and resources that you need. Also, I would be remiss to not invite you to our next webinar session. That is going to be on Thursday, July 15th. And this is for our small business owners. This webinar will definitely give you the tools on how to use YouTube to grow your business. If you're looking, to add some additional sites, be able to grow, learn more about YouTube, then you most certainly do not want to miss this session. All right. Well, thank you so much again for tuning in with us and sharing your lunch break with us. We look forward to seeing you back on July 15th at 2 p.m. Thank you so much again, Ms. Dani. Thank you so much to my wonderful teammates who are all on the line here behind the scenes. You can't see them, but we are a team, we are a family, and we are here to serve you, our community. Enjoy the rest of your week. Have a wonderful extended holiday weekend. Be safe, rest if that's something that you can do, and make memories. We look forward to seeing you soon. Have a great day.